And we are back with another video, and today we're going to recap the week. Today is on the 14th of June, and we're going to see how the trading week from the 8th all the way to the 12th has been. And you're going to see how I was able to make $1,000 trading gold this whole week from beginning to end. All right, now over here are the withdrawals, and there you go. Basically, it is extremely possible. You just have to apply yourself the right way. Now, let's see. This week I focused on two primary trading moves, as you can see highlighted here. My main bias was I was looking for gold sells. That is what we have been looking for the whole week, and let us see how we were able to come about that. Now, first and foremost, this week we opened with an aggressive bullish momentum on market open. Gold bought all the way from 42.74 at this level right here. And my target on gold was targeting levels of around 43.80 as per our earlier video. However, what happened is this was the region we were expecting gold to retrace into before bearish momentum to the downside. However, what happened is we got a very good reaction from the first imbalance on the 4-hour time frame that was between 43.41 and 43.65. All right. Now, why did I look for buys opposed to sells? Now, primarily, my bias was we had aggressive selling pressure the week before, so we were bound to experience some level of correction before we continue the earlier momentum of sells. Now, my correction levels were primarily targeting around 43.80. I repeat, I was buying to sell. Now, how did I come about this entry? Let's dive deep into that. So first and foremost, you will see currently on Monday, after having bullish momentum, we had a market gap or market imbalance, a valley gap over here. Now this bullish gap presented us with an engulfing, this bullish gap gave us candle closure above the imbalance, all right? Now I was expecting this bullish gap to give us market momentum targeting levels of 43.80. Okay, now how I came about my entry was about on the 15-minute time frame. If you dive deeper, you will see on the 15-minute time frame we also had a level of imbalance around here. Okay, this level of imbalance was what informed my decision around this area. Now, I did not enter off of the first candle wick, I entered off of the second engulfing candle. This candle engulfed the previous one, and then I was biased to enter buys, targeting just primarily the previously formed high beginning around 43.51. Okay, however, so this move I identified it on Monday and executed it on Tuesday. However, gold spiked all the way up to 43.63. Okay, now my stop loss, my area of risk was around 43.13, simply because it's a previously formed low, and that is what I always say: have your stop loss at the previously formed low. And my target area was around 43.50. All right. Now, what did we use? Our entry model was this imbalance over here. We waited to see an engulfing candle on the 15 minutes over this point over here. Now, remember, with market imbalances, you enter off of candle or body engulfing, not wick. You do not enter off of wick here. You wait for the body to completely engulf to give you bigger bias. We did experience some level of retracement earlier on at this point. However, if you stuck with the bias, the target was eventually hit and we managed to get approximately 100 pips extra. Now, when we come to the next trade we took, which is on Wednesday, first and foremost, when you look at the daily time frame, we're able to identify the fact that price action was still continuing with aggressive bearish momentum. However, we did not find a good confluence on the daily time frame. What we were able to identify was on the 4-hour time frame. On the 4-hour time frame, price action completely engulfed the 4-hour gap between 42.07 and 42.48. All right. Now, what does that look like? That looks like this. When you see price action completely reject an imbalance and engulf in this manner, it tells you you're going to have continuation of price action in that desired direction. Okay. Now, the moment we were able to see this, what we did is we came back down to the 1 hour and looked for anything that can hinder our trade, and we don't see it. So we come down to the 15 minutes. On the 15 minute, what you're focusing on is identifying an entry point, which requires you to be a bit keen. At this point, we came to the 15-minute time frame. We highlighted a gap between 41.78 and 41.81, and from that point on, price action came, completely entered, and closed below the gap. All right, this gave us a very good entry point to be able to take this trade and have our target set at 4100 or even lower. All right, now when it comes to entry points when you're trading gold, the most important thing you should wait for is candle closure. As you can clearly see, price action did enter our gap. However, it did aggressively go to the upside to tap the 4 hour gap and then close below. All right, so this was the best confirmation for an entry, and then you have your target set all the way down. Now, I did close this trade a bit early simply because I hit my target for the week. And when you hit the targets for the week, you do not execute more trades, you just wait and call it a good trading week. All right, now please make sure to like, subscribe, and share this video, and you'll be able to stay tuned for the next video coming soon. And that is the end of our video. Now, we reached our goal of 100 subscribers and I gave away 3,000 shillings. Now to our next goal of 1,000 subscribers, I will give away 10,000 shillings to the 1,000 subscriber. So please make sure you like, share, subscribe, and make sure to share this video, save it for later, and see you in the markets.